Under GST already said it is either invoice or tax invoice, which means invoice referred to in section 31 of CGST Act 2017. Whenever the transaction value is above 50,000, we have to record all the information. Below 50,000, it is not required. In which month we have issued the credit note, so I have to clearly mention the detailed information to the GST authorities. Warm welcome to 6M B.Ba student. The subject we are discussing goods and services tax. I am Professor Rajesh L.R. from Department of Commerce and Management from Vidhyaashram First Grade College Temple of Excellence, MYSURU. In our previous unit, we have discussed about input tax credit benefit eligibility and who are eligible and who are not eligible, and what is the amount of input tax credit can be taken here, and how the set-off can be made with the intra and interstate excess amount paid at the time of purchase. Every concept has been studied over there. Now, in this session, Unit 5, the GST procedure will be discussed. What do you mean by assessment, and how many types of assessment are there, and how many different types of forms are there. These are the major topics which will be asked in the examination related concept, assessment and GSTN structure, as well as your GSTF forms. This is a major topic they are going to ask in the examination. Listen properly and understand. We are going to have the introduction, invoice under GST, contents, debit and credit note, composition tax and return. This is a major concept what we are going to discuss in today's session. Introduction says for us, an invoice is a commercial instrument. Whenever we purchase any commodity, the seller is going to give an invoice for us, including the each and every information in the bill. They are going to record our name, our phone number, and what is our place. Like if I'm coming from different state, they're going to write the state, and they have to record all the information in that bill, and they have to generate with the GST. And what is the bill they are given? That is called invoice, or in the terms of GST, it's called tax invoice. Both are same. Invoice or tax invoice are same. This is very important document required for the GST. It identifies both trading parties, list, describes, quantifies, sold, shows, date of shipment, mode of transport, prices, discounts, delivery, and payment terms. Everything will be informed in that invoice. In certain cases, especially when it is signed by the seller or seller's agent, an invoice serves as a demand for payment, becomes a document and title when paid in full. So sometimes the invoice, whatever it is generated, it will be treated as a document for the payment, means collecting the amount from the purchaser, and it can be used till is paid by the purchaser to the seller as a original document. Under GST already said it is either invoice or tax invoice, which means invoice referred to in section 31 of CGST Act 2017, where it contains certain information like contents of invoice. The first, it should be a name, address and GSTIN, that is goods and services tax identification number of the supplier. What are the things it will be there? Next one, the consecutive serial number in one or multiple series containing alphabets, numerals, special characters like hyphen or dash or slash. Symbolize it as hyphen, this one is slash here respectively, and any combination thereof unique for the financial year. You can record it that one. It is left to you how you're going to have the things in the invoice. Like for example, reference number AB 2023 slash, we'll write it here. That's the thing what they're saying, that one. Either I can have the slash here or hyphen. It is left to the supplier how is going to indicate the information. Date of its issue. So the invoice should have name and address, GSTI number, and the reference of the transaction and date of issue. Name and address of GST or even if registered of the recipient means the purchaser who is purchasing, his name, address with his GSTI number or unique identification number if he is a registered person. Next, fifth one, the name and address of the recipient and the address of delivery where the goods has to be. Sometimes, for example, if I'm in the Mysore, I've purchased the goods, the person is in the Bangalore, I'll just inform him the goods has to be delivered to the Hyderabad. So now we have to record the delivery place along with the name of the state and its code, such as the recipient is unregistered, wherever the value taxable supply is 50,000 rupees or more. They're saying that whenever the transaction value is above 50,000, we have to record all the information. Below 50,000, it is not required. HSN code of goods or accounting code of services should be recorded, should be there in the invoice. Description of goods or service. Description is nothing but what type of commodities we are buying, how many commodities we are buying, and what is the unit price of each commodity, and whether the description will contain even if the quantities are in large or in small or in medium, or the size of the product what we are purchasing. Everything has to be informed clearly. Quantity in case of goods or unit or unique quantity code thereof. What is the total value of supply value, and adding all the charges or expenses which are related in connection with the sales that has to be added. Then the transaction value, taxable value of supply, and then we have to have rate of tax, whether it is central or state or union territory or IGST. So we have to charge that one. What is the amount of tax we are going to collect? Place of supply, address of delivery, whether tax is payable on reverse charge basis or what, signature or digital signature of the supplier or the authorized representative. All this information is compulsory in the invoice. There may be 10 marks question. What do you mean by invoice? And explain its contents. So this is the thing, information what we have to record. Next we have a debit note and credit note. In case where tax is being issued for a supply and subsequently it is found that the value or the tax charged in that invoice is more than what actually payable or chargeable, or where the recipient has written the goods, the supplier can issue a credit note to the recipient. Means, see here, the value or the tax charged is in the invoice is more than the actual. Like for example, it comes 1,500 here, but we have collected 1,800. In this case, we have to issue the credit note. For example, the tax is actually 1,500 and we have collected only 1,200. So we have to issue a debit note. That's it. What is a credit note? When excess amount is collected, at that time, we're going to issue the credit note. When shortage of amount or less amount is collected, then we are going to issue the debit note. This is a concept what we have between credit note and debit note, and it is compulsory question for 2 marks. Go through this one and understand. Next, we have here the same concept. A registered person who issues such a credit note has to declare details of such credit note in the written for the month during which such credit note has been issued. They're saying that one, in which month we have issued the credit note. So I have to clearly mention the detailed information to the GST authorities. Then only the person who has purchased, the recipient can claim the benefit of that one, or else the benefit cannot be claimed here. But not later than September following the end of the financial year. They're saying that one, before 30th September, they have to furnish all the details. If they have not furnished the details before 30th September of the financial year, so automatically they cannot claim any benefits of excess amount paid, or even the amount what we collected was very less when compared to the actual amount. The tax liability registered person will be adjusted in accordance with the credit note issued. However, no reduction in output tax liability of the supplier shall be permitted. They're saying that one, it can be adjusted with the recipient. We're not going to adjust with the output tax, whatever has been collected here. And interest on such supply has been passed on to any other person. If it is passed to any other person, For that, the interest will be charged or given benefit for the recipient. What does assessment under GST means? Assessment means determination of tax liability under GST law. The following are the various kinds of assessment: self-assessment, provisional assessment, scrutiny. There will be a 2 marks question for mention the types of assessment. There's a thing where to write. If they ask what do you mean by self-assessment, every registered taxable person shall themselves assess their taxes payable. Means I'm individual person here where I'm assessing my tax, right, myself, and then I'm submitting the details to the GST authority. That's called self-assessment, and GST law operates similar to the excise and VAT value-added tax and tax law and continues to promote self-assessment. Here we are giving provision for both the things what it was in the earlier cases. When explanation is not satisfactory, means the information whatever we have furnished under self-assessment, if the GST officer is not satisfied, then the officer may conduct the audit, or he may say to have the special audit, or he inspect and search the places of business of the taxpayer and initiate a demand or recovery of provisions. In case if he is not satisfied, he may conduct the audit, or he may have the special audit, and he may verify each and every place or business activities of the person who has filed the returns, and he may demand for the money to be payable by the recipient, and even he may recover all the amount due from the recipient. Section 60, provisional assessment. An assessee can request the officer for provisional assessment if he cannot determine the value or rate. Whenever a person is not in a position to determine the actual value or the rate here, at that time he may request the GST officer and file the returns. That concept is called provisional assessment. Who cannot opt? Composition scheme. Here they're asking who is not eligible for the composition scheme. Composition scheme is nothing but we have certain traders can claim this benefit where the tax rate is only 1% and they cannot claim the input tax credit benefit. Manufacturer of ice cream, pan masala and tobacco. These people are not eligible for composition scheme. A person making interstate supplies is not eligible. A casual taxable person or a non-resident taxable person, these people are not eligible for claiming composition scheme. What are the conditions for availing composition scheme? No input tax credit will be given for the person who has taken the benefit of composition scheme. The dealer cannot supply goods not taxable under GST such as alcohol. Means if he is supplying alcohol, he is not eligible for the composition scheme. Next we have here, the taxpayer has to pay tax at normal rates. Transactions under reverse charge mechanism. Only if it is under reverse charge mechanism, he can claim for the composition. If taxable person has different segments of businesses such as textile, electronic accessories, groceries, under the same PAN, permanent account number, they must register all such businesses under the scheme collectively, opt out for the scheme. When they're doing the business here, under one roof, they'll be having different concepts of business here. The different segments will be there, like textile, electronic and groceries will be there. When they register the things under GST with collectively, then they are eligible for the composition scheme, or else they're not eligible for composition scheme. What are the main advantages are there? Lesser compliance, limited tax liability, high liquidity as taxes are at lower rate. Means documentation is very less, and where I have to pay only 1% tax here, so no other burden is there for me, so it is benefit for me in the business. So what are the disadvantages are there? A limited territory of business, the dealer is barred from the carrying out interstate transactions. They're saying that one, he cannot do the business activities outside the state. If the business is within the state, he can apply for the composition scheme. If he's doing business both intra and inter, he is not eligible for the composition scheme. The taxpayer will not be eligible to supply non-taxable goods under GST such as alcohol, goods through e-commerce portal. So he is not eligible to sell any alcohol products, human consumption, and even he cannot sell the products through online. He has to sell the goods. Physical goods has to be sold for the consumers, and he will be not eligible to sell the goods through e-commerce. What are the records has to be maintained here? The major document he has to maintain here, the books, whatever it is there, purchase book, sales book, and the documents, the main instrument invoice should be recorded here. And even if they have the cash book, and e-ledger has to be maintained by all the taxable registered person under GST. What amount is subject to interest charges? If the lawmaker demands tax dues along with the interest on the gross payment, that is tax paid through electronic cash ledger and credit ledger, both, it may be an unhealthy practice from businesses perspective. To counter such recovery mechanism, the provision under Section 50 provides that when a registered person has paid the taxes through return specified under Section 39, so the difference amount, whatever we have here, on that he has to pay the tax. Like for example, the total tax was 21,800, where I have paid only 15,600. So remaining 200 plus 6,200 is there. I have to pay the tax remaining 6,200 along with interest at 18% as per the GST 2017. What is the period they are going to give? Under Section 50 subclause 2, they say that one period of interest will be from the date following the due date of payment to the actual date of payment. For example, my due date was 15th June, but the date I'm making the payment 15th December. So for this period, the interest will be charged at 18% per annum. What is GSTN? Goods and Services Tax Network. Goods and Services Tax Network is a non-profit, non-government organization. It will manage the entire IT system of the GST portal, mother database for everything of GST. So GSTN is nothing but Goods and Services Tax Network. It is a non-profit organization and it is a non-government related, and it is the main pillar for the GST, which records all the information of the taxpayers under a registered person for the GST, and it have all the detailed information of intra and inter. So everything, every pin-to-pin information will be maintained by GSTN. What is the structure? Private players own 51% share in the GSTN and the government owns the rest. Means out of 100%, 51% is private, 49% is government. It is a 10 crore US dollar, 1.6 million, of which 49% of the shares are divided equally between the central and the state governments, and the remaining is with the private banks. Like for example, central government 24.5%, state government 24.5%, this is 49%, and remaining all these are 51%. In that one, HDFC Bank, ICICI Bank, NSE Strategic Investment Company, LIC Housing Finance Limited, all these banks have, all these institutions or financial supporters have 10% each. Only LIC Financing is having 11%. The total GSTN structure has been controlled in this manner. It is a non-profit, non-government organization. What is GST return? GST return is a document containing details of the invoice has been paid to the GST, and they should have purchase, sales and output GST and input tax paid on the purchase. These are the documents should be there for payment of GST. How many returns are there under GST? So there are GSTR 1, 3B, 4, 5, 5A, 6, 7, 8, 9, 10, 11 and CPM composition 8 and ITC input tax credit 4. However, all returns do not apply to all taxpayers based on the type of process, whatever the business services they are doing. Based on that, the form has to be submitted to the GST authorities. Eligible taxpayer with the turnover exceeding rupees 5 crore are also required to also file a self-certified reconciliation statement in form GSTR 9C. See, here only we have 9 and here we have 9C for the people who are having the turnover above 5 crores. Now, quarterly filing of GSTR 1, annual turnover up to 5 crores can opt for quarterly or monthly. If they have opted for quarterly, January to March, January, February, March, so the due date for the payment will be 13th April. April, May, June, the due date will be 13th July. So whenever they opt for quarterly, these are the period how they're going to allow and what will be the due date for the payment of taxes. If it is a monthly, so then January, 11th February will be the due date. February, March, April, May, June. For February, it will be 11th March. For March, 11th April, 11th May, 11th June, 11th July is the due date for payment of GST. For GSTR 2 and 3, the filing of these forms currently suspended. But we have the dates here, the same thing for the monthly concept. Next, we have here 3B. Annual turnover up to 5 crore can opt for quarterly filing. And here also the same thing, January to March, but 22nd and 24th of April will be the due date. For this one, 22nd or 24th July of 2024 is the date for the persons, registered persons who are using Form 3B. And if they're having monthly returns, the same month year, the date is 20th of the next month, following month, that is called succeeding month. Thank you to all 6 MBBS students. The concept what we have discussed in today's session was GST procedure, the assessment and the forms, whatever we have, and the filing either quarterly or monthly basis, what is the due date for certain forms. Namaste and thank you.